All right, what's going on, everyone? We're back with the weekly recap and outlook video. We got a lot to uncover from this past week, and we got a lot to go on this week with Thanksgiving and FOMC minutes. So let's go ahead and break it down. All right, so here's some of the weekly recap that we got coming out this past week. Remember, bad news is good news continuing going forward into the December rate hike decision. We had PPI month over month come in lower than expected. Bad news is good news. Retail sales were actually a lot better than expected, but that housing market index, terrible. Housing market is on the brink of a full-on recession at this point. Now, one thing I want to talk about is the jobless claim. So we had the initial jobless claims still coming in lower than expected. The job market or labor market is just showing so much strength right now. The continuing jobless claims are a little bit higher than expected, but they're getting a lot more narrow. We need the labor market to start showing more weakness. Along with inflation continually going down. The faster that happens, the faster that the Federal Reserve can pivot. And then, of course, we had existing home sales month over month. Terrible. Nobody's buying homes right now. Everybody's trying to save their money. All right, so economic data outlook. This week we don't have a lot of data coming out Monday or Tuesday. Tuesday we have multiple Fed officials speaking, but as far as economic data, we could see a slow trend day on Monday and Tuesday. On Wednesday, we have a lot of the data coming out. We have jobless claims, durable good orders, and the S&P manufacturing data come out, along with the Michigan consumer sentiment. We have at the end of Wednesday FOMC minutes coming out. I'll talk a little bit of what I expect coming from that as well. But just keep an eye on this. On Monday, we could see a gap down, just mainly because last week, if you don't remember, the third week of every month is now monthly OPEX or option expiration. It's just an abbreviation for it. 25% of those calls expired on Friday, so we could see a drop down or gap down over the weekend. Typically, the third week of every month or OPEX week is very bullish, and the next week, which is the last week of every month, is typically a little bit more bearish. But I will get into seasonality real quick. All right, so seasonality, Thanksgiving week prediction. We have right here the algo flow. It's pulling down, looking around 392. So I expect here on Monday and Tuesday, we could start slowly trending down a little bit, just mainly because we don't have any economic data. The OPEX was last week. It pushed us higher, and all of those calls are starting to sell. Puts are being bought. Could push us down a little bit lower. Now, I'm looking at this 392 level. If the algo flow continues to go down, we could see some bounces, but we could get pulled down. But I also want to talk about I want to talk about the seasonality of Thanksgiving week. Thanksgiving week has been historically bullish, especially the day before and after Thanksgiving. Now, remember, Friday is going to be a shortened trading day, just mainly because a lot of people are still celebrating those Thanksgiving days. We could see some lower volume on Friday, especially with big investors and hedge funds kind of taking off early for Thanksgiving or for the early weekend. But I do want to pull out here on Wednesday with the FOMC minutes, we could see some very bullishness, just mainly coming from the minutes. So if you remember last month, we had all of this housing market data and everything in the bond market showing some extreme pain, and the Federal Reserve was talking mainly about how we could possibly see some rate hikes in the future. So if anything in the FOMC minutes talks about lower rate hikes going into the future, we very well could see a little bit of a bullish push. And I'll break out the technical analysis here in a second, but just the seasonality of this Thanksgiving week is very bullish. Now, remember, it is the last week, like I said, in OPEX. So we could see a little bit of bearishness at the beginning of the week, and then once the FOMC minutes and all this data starts coming out, I'm probably going to be very cash relevant on Monday and Tuesday, and very heavy on Wednesday, just mainly because Monday and Tuesday I expect low volume, high volatility leading up until the FOMC minutes. And just Thanksgiving week has been historically very bullish, but also historically very low volume because people are taking off this week. So just keep that in mind, and let's go ahead and break down some. All right, so let's take a look real quick at SPY right here. So we see we've been continually just trending up in this rising wedge. So it's only a matter of time it's only a matter of time that we do break down, but it's just a matter of when and how hard. So like I said, I'm going to be going very lightly this week on Monday and Tuesday. No economic data coming out, along with probably going to be lower volume, just mainly because of Thanksgiving week. I think Wednesday and Friday we do get a push, possibly bullish side, just mainly because of seasonality this week, and along with the FOMC minutes, I expect lower rate hikes to be mentioned in there. So now let's talk a little bit about rest of the year looking forward. I think we do get one more hard push going down, just mainly because the stock RSI is overbought. The MACD on the daily is starting to slowly finish out that bullishness. I think this could be the possible last week that we really get that hard push up. And especially looking at Apple, we bounced 3 times now off of this daily support. And if you look at this MACD on Apple and stock RSI, it looks like we could see a little bit more push and then a crossover happening right now on the MACD, which actually helps with that possible rhetoric that this could be the last actual bullish push week that we have. On the SPX on the 4-hour daily chart or 4-hour chart, we have a little bit about a push down, but I mean, like I said, we've been just continually riding, and this 4,000 level is going to continue to be very, very, very bearish. It's going to be some hard resistance, going to be a little bit sticky around this area, which makes me think that we could see a little bit of a gap down going into the rest of the weekend on Monday. Just mainly because we couldn't break out here on Friday. We had a very hard trouble really pushing up, and just we just don't have enough economic data or anything really kind of news coming out that's going to help push it up over the weekend. So I'm just really keeping an eye on this rising wedge. Once we get that initial breakdown on the rising wedge, though, remember, watch that retest, because we could always have a possibility of a fake breakdown. We could also have the same problem if we have a fake breakout. So I always wait for that retest. So if we break down right here and we feel this gap, we could bounce a little bit all the way back up here and retest this level before continuing going down. So that's why I always really watch that. But going into the rest of this week, I am going to be a little bit more on the cash side. Just holiday week, it is seasonally bullish, but it also is the last week, and we had monthly OPEX expire this past week with 25% of calls expiring, and heavy puts were getting bought on Friday. So I'm going to be going lightly this week until Wednesday, where that's when I actually will be playing the news. So everybody, just remember, know your risk management. If you like this video, just don't forget to like and subscribe. Thank all of my subscribers and all of my fans and followers. So everybody just continue to have a great week. I will continue to update the daily posts with the call walls and the put walls, and mostly of the bullishness and everything that I see, mainly depending on what the Fed officials say on Tuesday and the data that comes out. So everybody continue to have a great weekend, and I'll see everybody next week.